Today, folks, the Grinch just stole your Christmas rally. Of course, we're talking about the Federal Reserve's very own Jerome Powell, the money printer, a chair over there. And he lit the market up today like the 4th of friggin' July, like a Christmas tree, sending the S&P 500 down in absolute abysmal 3% on the back of guidance, cutting interest rates less because inflation still remains strong. Yet I think that there is another agenda at play that is just as important, and that is turning the US into a global powerhouse unlike any other time in history. And you are feeling this if you live anywhere else in the world where you have to deal with your own currency against US dollars. And if you live in the US, I want to kind of just show you exactly the power that you now wield in your hand and why you are far richer than any other time in history. I think it's kind of mind-blowing. So if you're on a path to financial independence, if you damn well one day want to retire early, join me on that journey. Hit that subscribe, as I will reveal my plan, my portfolio toward the end of this video. But the Fed cuts by a quarter point, but indicated fewer reductions ahead. And this has really scared everybody. This man right here, I think, knows what he's doing beyond a presidential level. I mean, basically, they're saying that there's likely only going to be 2 cuts next year by like 50 basis points, which basically means the median official has indicated 50 basis points, which in 2025 would take to 3.9%. This indicates just 2 quarter-point cuts next year. This is horrifying people because if you're trying to get a mortgage, if you're trying to buy a Tesla, a car on financing, a brand new MacBook, it's going to be very tough, which puts a wedge in potential growth for many of these companies out there, which is why the market took a big breath backwards, right? Which is good. I think it's a healthy correction. I think Jerome Powell's achieving 2 things. He's making the US dollar the most dominated currency globally, and he's cooling the market off from this absolute hype cycle that we cannot go back to like we did in 2021. I applaud the man. I think he's doing actually a fabulous job. And if we take a look basically at the US dollar right now, well, the stock market tanked, the US dollar absolutely skyrocketed. I mean, it took off dramatically. And if we zoom out at the all-time, how is the US dollar sitting at levels it hasn't seen basically since the 2001 dot-com bubble? That's because so many countries right now are pleading to the United States that we are heading toward a recession. Canada's on the brink of a recession, Europe, China, all of these countries have been struggling really bad in this market environment. Yet here's the US. Yeah, inflation, yeah, it's a bit higher, right? You take a look at the inflationary chart at 2.7%, it's ticking up, but I think most of us can recognize that the majority of inflation is behind us and the US is not collapsing. And basically because their interest rates are higher, that tells every other nation out there that we want to own US assets, US treasuries, US money market funds, GICs, bonds, high interest savings, fixed assets to make higher rates of return. And because our currencies are depleting, we want to get it out of our currency as quickly as possible. And this has started a brand new trend. All this money sitting in money market funds, I don't know if it's going to make its way into the market ever, but people are making so much money on the back of their currencies deflating. This is why the US is becoming one of the most powerful countries, because the demand for their dollar is insane. If you took your money in the United States and you moved anywhere else in the world right now, do you know how rich you are? In Canada right now, 1 Canadian dollar is the equivalent of 69 United States cents. You know how horrible that is? Look at the euro. 1 euro now is worth like $1.04 United States, and the euro has been tanking. Like, I mean, it's down 7% here, guys, and most of that has just happened in the last month. You've got the yuan. The yuan is down absolutely abysmally here, 3% just within the last quarter after rallying back a little bit. You got the Indian, basically rupee here. Look at this. This thing is down just as much as like the Canadian dollar. Well, actually, it's not hurt nearly as much as the Canadian dollar. And of course, we got the Russian ruble, which is still going down this year, but you know, that might be on the back of other geopolitical events. But yeah, when I look at these currencies and you zoom out on the long charts, you look at how horrible it is to be investing in other countries' currencies. It has just been not your friend. And if you had any foresight and you've been investing in the US markets in US dollars, your rate of return has been so much substantially higher. I can't state that this is going to be true in the future, but for the last 15 years of my investing career, especially in the Canadian market, I've done everything in my power to buy as much US assets as possible because I've seen a double-edged return. Not only have I seen the US stocks go absolutely parabolic over the last 10 years, but you know, if you go back to basically 2010, we've lost 33% of our value. In the last 5 years, from the peak to the bottom here before the pandemic, that's an extra 16%. If through 2022 you were just investing in US stocks. And this was a period where stocks were going down pretty dramatically here, right? So if we take a broader view of the market today and I look at these stocks, and now we're into after hours, but I mean, look at GameStop, like down 8%. I think Tesla dropped a whopping 8% and is now down another 1% in after hours. I really think what this is doing, again, is a huge applaud to Jerome Powell. Not only is he cooling the market off right now, which opens up better buying opportunities for me and you, because I'm looking at this saying, wow, if these things are going to go down a bit more, like I'm going to keep cost averaging, but I need a little bit more aggression than this to get super excited. Like I said, I don't get excited until the S&P's dropped about 10%. If we could see a 10% correction, you know, I'd be over the moon, and that's where I'd get way more excited. I'd take some of my emergency cash and I would really start doubling up some of my investments. But Google down to 188, it's not that exciting. Meta was at under 600 not even that long ago, guys. This is just a healthy breath that I think is required, and it's a good wake-up call and why you should, take profits if you've been chasing gains. It's been a crazy momentum market, and I think we just stole the momentum out of this market. If we take a quick look though at, say, like even the TSX globally, what this has done though is just sent so many stock markets into peril. Whatever happens in the US tends to follow the rest of the market. So Canada is taking an absolute calamity hit here. All the stocks we talked about yesterday with Canadian dividend stocks getting hit got hit even damn harder today, which is super painful. I mean, look at the TSX today. Whoo, baby, this is like painful. I mean, look at Shopify's down over 5%. Tech's getting hit super heavy here. I'm just trying to look at Bell. Bell's basically flat. TELUS getting a hit a bit more. Again, I think we're into after hours, but what a very painful market experience this has been today, and I love it. I live for it, baby. So my plans with my portfolio, I just did an update on the wife and I, our portfolios in the courses. You can go get it at kylelivingston.com. It's a one-time price, and you get full transparency into how I manage or how we manage our portfolios together. But also on my portfolio side of it here, guys, again, I should have waited a day to buy. Obviously, I went pretty aggressive here over the last couple of weeks. I got good prices on Google. Around 192 was the last tranche, so we're not too far from that. But I did buy VDY and SCHD before they dropped. A lot of those were drip related. SCHD auto reinvested the dividend. But honestly, like I said, guys, I always have a bit of cash, some buffer, just in case moments like this take place. But this is not a moment of anything crazy. A 2 or 3% movement in the S&P, who cares? I'm hoping this triggers a mass profit taking event. We shake out all the momentum players. We go back to a more modest market where valuations start to make a bit more sense, knowing companies aren't going to be able to grow as aggressively, knowing people can't buy mortgages, knowing people are still going to be a bit tight on payments. This does constrain a bit of the market. But again, at the same time, you guys that live in the US, your dollar power is unreal. I mean, you're globally beyond riches that you can't imagine, that I can only appreciate as a foreigner owning mostly US stocks. The wife and I don't have any more than, I can't even remember. It's a fairly small amount. I think it's like 15-20% of our portfolio in the Canadian markets. We are purely mostly US stocks. And I sleep so much easier at night seeing the dollar difference, man. Again, this is why I told you guys I immediately convert, and I made money on the conversion. It's actually cushioned the blow to my portfolio. Think about it. In the last day here, the market has now dropped. The Canadian dollar's almost dropped 1 cent or 1%. So if Google's down, whatever it's down today, I'm actually up still a percent on the currency conversion value. It's crazy to me. Though I'm never going to sell my US dollars, by the way. If you live globally, everyone accepts USD. I can pull USD out of my investments, so I don't care if the dollar goes up or down. I just wish it was higher so I can keep converting. But I'd love to know what you're doing, how you're handling this market environment, and what you think about the future of interest rates. Like I said, my conspiracy theory is it's just to keep the dollar at record levels. The US is a global powerhouse that has some leverage now against foreign markets, so it's super interesting.